Hi, I'm Marcus Colston, founding partner of Champion Innovation Partners, and you're watching Taking Stock.
We got 2 minutes to go here into the closing bell here on the trading floor of the one, the only, the truly iconic New York Stock Exchange on this Tuesday, July 14th. I forgot the date. Welcome to the broadcast, one and all. You're watching Taking Stock. I am your host today, J.D. Durkin. Coming up on the show, cannot miss market coverage, including the great Phil Rosen of ProCap Financial. Phil is on deck. We'll get his take on today's tape, the state of the AI trade, and much more. As we head into the closing auction here on Wall Street, the S&P 500 largely lifted, you could argue, from NVIDIA's outperformance today. The S&P itself up about 0.5%. The Dow, what a story that has been. We had some key intraday reversals in Caterpillar stock, the second most weighted name in the Dow. It pushed the Dow lower and then higher and then lower, and then here we are up 0.07% with just moments to go until the bell. The New York Stock Exchange Composite Index in negative territory, 0.16%, and the small caps in positive territory, 0.4%. Tech, energy, financials, the outperformers in the S&P, and some lagging sectors as well to mention: healthcare, real estate, and consumer staples. All this coming as investors on Wall Street today continue to digest a far cooler than expected CPI print, the biggest monthly decline we have seen in 6 years. That's the crowd cheering. They're not cheering for me. They're cheering for David Steinberg and the team from Zeta, ticker symbol ZETA, here at the big board. David will join us in just a bit. But first, time for the closing bell. There you go. That's our old friend David. He's been on the show before. He'll join us here coming up in just a little bit. Your final tale of the tape on this Tuesday, the 14th of July. The S&P 500 up 0.4. The Dow holding on to fractional gains. It usually takes a moment or two for the dust to truly settle. The NYA down 0.2. The small caps up, let's call it 0.4. Over in the Dow, Goldman Sachs, a huge day. Shares up about 8%. NVIDIA up about 4%. JP Morgan, a Dow leader as well. As for the laggards, we have a few of them: IBM, Merck, as well as Cisco. The Magnificent Seven tech stocks kind of in mixed territory. Outperformance from NVIDIA. Microsoft is the hardest hit of the Mag 7 stocks. Not the first time we've said that this year. Catching a bid, most of the big banks, the home builders, the semiconductors, and the memory stocks all doing pretty well. Down across the tape, the major airlines. You don't want to listen to me ramble on about the markets, but I know someone you might want to hear from, the great Phil Rosen, Chief Market Strategist at ProCap Financial. My man, welcome.
Thank you for having me, JD.
Phil Rosen, Tuesdays on Taking Stock. It's a weekly holiday for us here on the broadcast. Thank you for being here. Your takeaways here: CPI, cooler than expected. Headline, cooler than expected. Core CPI, what did you make of this inflation print today?
The lowest inflation we've seen in quite some time, and the biggest monthly drop in, I think, 6 years. That's a pretty good day, from what I can tell. And this is what I've been talking about for several months at this point. I have been saying that we are more likely to get a cut than a hike from the Fed in 2026, and the market has been on the complete other side of that call. CME data has been saying that we're going to get a hike in July, we're going to get a hike in September. All that reversed today when we got this cooler than expected inflation report. The economists across the board all wrong, all the prediction markets all wrong, and I think markets should be pretty good at this point, as in the optimism for cooling inflation continuing to cool down. The energy shock, look, that's not really the Fed's remit to be trying to manage the what's going on in Iran. They have to focus on what's directly in front of them in the economic data. I'm still in the camp we're going to see a cut more likely than a hike this year.
Talk to me a bit more about your expectations for what the Fed does, assuming maybe we get a few lighter than expected inflation prints. Hey, we heard from Kevin Warsh today testifying to the House of Representatives, and tomorrow he's back on the Hill facing members of the U.S. Senate.
I think Kevin Warsh, he has to come out and earn his credibility with the market, right? He's going to come out and be hawkish. He's going to say we have to combat inflation. The war's not over yet. All this stuff, that's the rhetoric that he has to put forth to earn his credibility, earn his stripes with his committee members at the Fed. But at the end of the day, and this is what I've been saying since January, he's going to come in and he's really there to cut interest rates. That's why President Trump put him in. That's why he got the bid to do the job. And whether or not you agree with that outlook, I think that's what he's there for.
We're not just talking inflation. I want your take on how the AI infrastructure build out and the general conversation on CapEx spending is impacting inflation. Maybe not something that's top of mind, but you're a total pro. You cover this stuff all the time.
So this morning I actually wrote a newsletter and I published how software inflation is up almost 15% year over year. And most people don't look at that because frankly it's not going to move the needle on CPI. It's probably 0.01% of CPI, software inflation. But if you look at some other components like electricity costs and some of the construction costs related to data center build out, AI has its own ecosystem of rising inflation. That's, on one hand, that's what you'd expect because this is a $1 trillion boom we're seeing. On the other, you and I may not feel it, JD, because at the end of the day, this is going to be a negligible part of the actual CPI basket. So it may not hit our wallets, but the prices behind the data center build out, the AI build out, are definitely rising right now.
I got less than a minute left. It's a busy week here on Wall Street. Big bank earnings. We'll hear from Netflix and a few other names. You got inflation prints. Any other big potential catalysts, Phil Rosen, on your radar we would benefit from also paying a little bit more attention to coming up?
Earnings are the big story, right? Big banks came in, totally hit it out of the park. JP Morgan, they're reporting massive numbers. Goldman Sachs reporting massive numbers. I don't know if that was necessarily that surprising to me. I've been very bullish financials for the last few months, and it looks like they're at a great inflection point right now. The rest of the earnings, Netflix, I'm not too concerned about. They're not on my radar, frankly. But otherwise, I think we're going higher from here.
The great Phil Rosen, Chief Market Strategist at ProCap Financial, and my very good friend, most importantly, above everything else, brother man. We'll see you again soon.
Thank you, thank you.
Robbie will grab your mic. Todd will head this way. Here are the few top analyst calls that moved the tape this morning here on Wall Street. First up, Evercore ISI initiating coverage on SpaceX with an outperform rating, calling it too compelling to ignore at these levels. Price target, 230. KeyBank next up downgrading Apple to underweight. They say its checks show, quote, below trend growth. Finally, at this hour, in terms of analyst calls, HSBC downgrading IBM, calling the valuation stretched. Their price target has been slashed from 231 down to 191 to reflect broader sector derating. We're on the topic of IBM. We got to continue talking about IBM. Todd, this is a stock right here that is down 25.21%. This is the single biggest day drop in IBM history, knocking off its 23.7% drop in October of 1987. Preliminary numbers show its second quarter profits falling far short of expectations. CEO Arvind Krishna citing weakness in software and infrastructure. IBM somewhat pulling down the Dow on the day. This is a stock that has been trading publicly for many, many years. Never before have you seen it down more than 25%. And we'll talk about JP Morgan here because Phil and I were just breaking down some big bank earnings, having a nice tape, up 2.5%, reporting the highest quarterly profit in U.S. banking history. CEO Jamie Dimon citing a favorable environment with an elevated level of market activity as one of the many factors. Shares up today, 2.5%. Coming into today, they were up 3% year to date. Yesterday, FinTech TV's very own lead anchor, Remy Blair, caught up with Adrian Fritz of 21 Shares. They discussed whether or not we've seen the bottom for Bitcoin, Solana RWA tokenization, and much more. Take a look.
Joining us to weigh in is Adrian Fritz, who is Chief Investment Strategist at 21 Shares. Adrian, good morning. Thank you so much for joining us. Well, we did snap in 8-week losing streak on Bitcoin and ETH ETFs. So what is behind that reversal? And given the price action this morning, do you think it's too early to call a market bottom?
Yes, I would say it's still too early to call it a bottom or even a trend reversal. We're clearly still in a macro bear trend. However, we're going into a historically very exciting phase of the cycle. And obviously, just historically speaking, 1 year after the all-time high, or usually 2.5 years after the prior halving, we're moving into a bottoming zone. And I think, yeah, so some investors are aware of that. It doesn't exclude further volatility throughout the summer, but I think just if the story repeats, it's getting more and more interesting to start building a position in Bitcoin.
Yeah, and when we take a step back, as you mentioned, and we look at the Bitcoin chart, it is down nearly 50% from its peak, and year to date, Bitcoin is off a little over 28%. But given what we're seeing in terms of accumulation and supply, can you give us your take on why you think it's not a systemic collapse right now?
It's not just looking at ETF holdings, for instance. Of course, in the US, June has been quite a bad month. As you mentioned, we're seeing over 5 billion in outflows. But despite the price being down 50%, we've only seen a pullback in ETF Bitcoin holdings of around 10%. So that clearly shows that some of those traditional investors, they hold through the volatility. The market structure of Bitcoin has certainly changed, and therefore I wouldn't call it a systemic breakdown, because we haven't seen any kind of like major scandals, scams, something like FTX or Luna, a major collapse. It's really just a reset given the macro environment and also the cycle timing.
Yeah, and I do want to expand on this since you did mention that real world assets on Solana are jumping over 200% year over year. But with the Alpenglow upgrade, do you think Solana is potentially overtaking Ethereum as the preferred institutional layer?
Potentially. I think Solana always stood out in regards to their commercial efforts and initiatives. So they've been very good in striking like very high-level strategic integration and partnerships. It spans from Visa, Citi, MoneyGram, Stripe, PayPal, and so on. And just given that the infrastructure is much cheaper, much faster, it could really be the base for more institutional adoption going forward. We all know Ethereum had its struggle just because from an infrastructure point of view, it's much more complex. We see a lot of fragmentation in regards to the layer 2 ecosystem. And I think that could be the opportunity for Solana to potentially even flip Ethereum in the next cycle. Who knows?
And very quickly, before I let you go, Adrian, since we have kicked off the second half of 2026, give us your outlook as we head into year end.
We believe we're going into the pre-halving narrative again. Of course, it kind of looks dire just looking at price charts, no one really paying attention, but that's usually where the opportunities are. I mean, the value proposition of Bitcoin hasn't changed. The macro environment, we believe sooner or later we will see some rate cuts. We will see some easing in regards to the inflationary pressure coming from the war and from oil. But just given, if we put everything together, meaning the next phase, the next cycle, macro tailwinds, hopefully some regulatory tailwinds, and just a narrative that builds momentum, we do believe that we could see a recovery, up to 90, maybe even 100K by the end of the year.
Well, Adrian, a lot to keep our eyes on as we head into the second half. So thank you so much for joining us today, and thank you so much for sharing your perspective.
Welcome back to the show. You are watching this Tuesday afternoon edition of Taking Stock live from the trading floor here at the New York Stock Exchange. Simeon Hyman joins me now. He is the global investment strategist at ProShares. Really grateful for your time today. Thanks for being here.
Thanks so much for having me.
So you just launched today SKHU. It is a 2x leveraged ETF specifically for SK Hynix, a South Korean memory giant. First and foremost, why? I got to imagine you're seeing no shortage of appetite for a product like that in the market.
Look, SK Hynix is at the center of the AI boom. Semiconductor company, memory, key to the AI infrastructure. And indeed, there has been great demand for single stock leveraged ETFs, particularly with the ADR coming to market. We thought it was a great opportunity. The ticker is SKHU, ProShares Ultra SK Hynix, and it does indeed target 2 times the daily performance of the stock.
Talk to me a bit more about how it actually works. Is there a daily reset? And for investors who are watching at home, they hear these headlines about these 2x leveraged ETF products. What are the fundamentals about them they should know if they're interested in adding it to their own portfolio?
It's pretty simple. You're right. It targets 2 times the daily performance, and it's a great tool to magnify a bullish view. You get more exposure with less capital at risk. Very important, you don't have to worry about a margin call, and you access it with just that ticker in your brokerage account.
What are some of the biggest misconceptions you already see happening out there in the narrative as people talk about products like these?
I think the ecosystem is the piece that people are missing. You've got the stock, you've got the ADR, you have the leveraged single stock positions, and what that provides is a very robust ecosystem for trading and liquidity. People with different points of view, with long-term perspectives, with short-term perspectives, and I think that's what people are missing, the health of the ecosystem.
What do you think ultimately is driving so much of the demand right now for these sorts of products? Not just the one that you and your team, I'm sure, are very proud to have released today, but leveraged ETFs overall. I mean, I think longtime investors or even day traders are certainly not going very far day to day today without hearing about products like this.
It really is that simplicity. I mean, to be able to have that access, to get more exposure with less cash at risk, and not have to worry about margin, not have to worry about a margin call, and to be able to execute that with just a ticker in your brokerage account really democratizes and gives that opportunity a real easy functional way to do it.
How do you separate signal from noise when you and your team at ProShares are going about trying to figure out which sorts of these comparable products you want to issue and which ones maybe are not quite ready for prime time just yet?
We're always looking for the right opportunity, and certainly we want robustness and liquidity in all those things. In this case, the catalyst was indeed the launch of the ADR in the US, but there are lots of ways that we look to innovate and see opportunities.
How else does this fit into your single stock ETF lineup, and are there other comparable products that people should also know about?
We have a nice robust lineup. We're the largest provider of geared leveraged ETFs in the world. We have about $85 billion, TQQQ, 3 times the daily performance of NASDAQ. Sure. Everybody knows that one, but we have a growing lineup of single stock ETFs as well, including SpaceX, Coinbase, Circle, NVIDIA, and Tesla. So we're growing that part of our lineup as well.
I got to imagine in this ecosystem, this landscape, no shortage of interest in a lot of those names you just laid out.
There isn't, there really is not.
Simeon Hyman, Global Investment Strategist at ProShares, launching the brand new SKHU earlier today. Congratulations. Thanks a lot for being on the show. It's nice to have you.
Thanks for having me.
Don't go away. A lot more Taking Stock coming up live from the trading floor of the big board right after this. Welcome back to the show. Joining me now, not making his Taking Stock debut, but coming back onto the broadcast, David Steinberg, co-founder, chairman, CEO of Zeta Global, and here to ring the closing bell today. Nice to see you again.
By the way, I'm shocked you had me back after last time, so this is great.
The interview went so well, back by popular demand. First of all, how about the experience doing the bell? Have you done the bell before?
I have done the bell before, but it is still one of the most exciting things you can do in business. It's really cool.
And it's awesome to have you back today. First, I got to ask about growth. We got the ticker symbol up here behind us, 3% today, up 8% on the year. The stock is now up 50% off of the year-to-date lows. We're seeing a lot of growth. What is driving that growth for the company?
Well, first of all, in the first quarter, the business grew 50% top line, grew 30% organically, profits, free cash flows both grew at exponential paces. And what's happening is our pivot in 2017 to make AI and data foundational to our application layer is working. And clients are buying more, and we continue to win in the marketplace.
I want to ask about this big pivot for the company here, the push, AI infrastructure for enterprises. What does it mean to actually be the intelligence layer for companies, and in what way is that maybe a bit different than your previous priorities, David?
So, great question. When you think about it, our business has grown up really as a business intelligence platform. We have 535 million active people opted into our data cloud, 5,000 to 7,000 data elements per person, trillions of signals coming out of digital, and we use them to create the highest return on marketing spend possible. Today, we generate greater than 600% return on marketing spend. In the last year, we've signed agreements with OpenAI, Palantir to re-architect our entire platform on top of Foundry, and then rolled out with a number of other partners, including Snowflake. What that's done is it's allowing us to add a fourth use case. So you have customer acquisition, customer retention, customer monetization. Now you have real-time business intelligence. How do we help enterprises better select their next location for their retail store? What should they be manufacturing or ceasing to manufacture? How do inventory levels look at different locations across the world? Our platform, using our real-time signals, can now inform in forward view. In the past, all business intelligence has been in the rear view mirror.
Let me get your take on a few of these can't miss partnerships. You're moving your platform onto Palantir's Foundry software.
Yes.
What do you expect or hope that will most allow customers to better do?
So first of all, it's going to allow us to expand out of just marketing and into true business intelligence and business decisioning, because they have built the world's greatest oncology and data layer. So by layering on top of that, our clients will be able to seamlessly move data in and out. So what is it going to do? It's going to make us substantially faster, substantially smarter, and by the way, a 7-year joint go-to-market with Palantir, where we're going to sell their clients as we'll be their marketing partner, and then we're going to sell to our clients a better platform because it's going to be foundational on Foundry. We think the Palantir agreement is by far the largest thing we've ever done, and we think right now the market doesn't understand how valuable that's going to be.
David, the last time we had you on the show, you and I were talking a lot about your AI assistant, Athena, which itself is looking a bit different, now using OpenAI's voice technology. What does that mean, and how did that even come together?
So when you think about the way humans interact, for thousands of years it's been like this, we speak. And then in the 1950s, we created this thing called the keyboard, which really is a barrier to really creating the outcomes you want. Athena is a voice-enabled super agent that you just tell it the outcomes you want. So I'd like to create 2 million incremental customers this quarter while simultaneously lowering my cost to create a customer by 7%. Athena can then navigate the entire platform to get you to those outputs. With Athena, which is powered by OpenAI, one of their first enterprise partnerships, and now built on top of Foundry, she's going to become the true operating system for our clients' entire businesses going forward.
David, I always say it's a great interview when I'm upset that I'm out of time because I have so many more questions I want to ask them. Do you have to come back for a third time at some point?
If you want me, I will come.
David Steinberg, co-founder, chairman, CEO of Zeta Global. Congratulations. Thanks a lot for being here.
Thanks, Jay.
Really
so
nice
great.
to see you.
Thank you.
Don't go away. A lot more Taking Stock coming up live from the trading floor right after this. Welcome back. Time at this hour for a few headlines in the world of fintech, cryptocurrencies, and artificial intelligence. At this hour, the crypto majors all up. Bitcoin currently holding on right around 64,400. Next up, Chinese AI startup DeepSeek preparing to file for an IPO as soon as this year, while seeking fresh funding at a valuation of at least 71 billion US dollars in order to fuel its AI expansion. Finally, the US and UK deepening their own crypto partnership by creating a framework to support stablecoins and coordinate on cross-border rules for digital assets. And now Money 2020's very own Scarlett Sieber is back to explain all of the ways that fintech companies actually make their money. Take a look.
Welcome back. I am Scarlett Sieber with Money 2020, and this is how fintech companies actually make money, where we stop admiring interfaces and start asking where the money actually gets controlled. Today we're going to be talking about modern treasury, and this one matters because payments don't usually fail at the front end, they fail in reconciliation. Modern treasury helps companies manage payment operations across multiple rails: ACH, wires, RTP, FedNow, and increasingly stablecoin settlement, all from one system of record. So how does modern treasury actually make that money? First, enterprise SaaS contracts. Companies pay recurring fees to manage production-grade money movement, not experiments, not pilots. Second, workflow lock-in. Once approvals, ledger logic, and reconciliation live inside modern treasury, swishing isn't cosmetic, it's actually very risky. And third, monetizing fragmentation. As companies add rails, banks, PSPs, and geographies, payments get harder, not easier. That complexity, well, that, my friends, is the product. So why now? In the last month, modern treasury expanded from orchestration into owning more of that payment flow itself, collapsing multiple rails into a single operational layer. That shift from tool to infrastructure is really important. Modern treasury doesn't monetize transactions, it monetizes control over payments. And that is how modern treasury actually makes that money, by owning the layer where money stops being theoretical and becomes accountable. Have a fintech that you want broken down without all of the buzzwords? Drop it in the comments and it might just make the cut. In the meantime, back over to you.
Tomorrow morning here on Wall Street, big bank earnings continue before the opening bell. Tomorrow morning, we will hear from the latest results from teams like BlackRock, Morgan Stanley, as well as Johnson & Johnson, plus Bank of New York. At 8:30 a.m., the PPI inflation print after today's cooler than expected CPI number. And Kevin Warsh testifies to the U.S. Senate. Thanks for watching today's edition of Taking Stock. Have a great Tuesday night. We'll see you again tomorrow.